All right, and we're live. What's going on, Roy?
Nothing much, kind of quiet day, no big IPOs or anything, not much market. Wait a minute, it's the opposite. It is, of course, Fiesta Friday. Glad to be here with you guys. Main topic at hand, of course, is going to be SpaceX, the IPO, some implications, some interesting facts and figures, also a lot of other little bits of news that we'll cover kind of rapidly. And we'll hit Q&A pretty hard and fast, I think, today, too. How are you, Tevis?
Good, bro. Just trying to set up this light. But yeah, good. I had a full work day today, and I got like 4 hours of sleep last night, and I'm doing this pod, so I got my trusty energy drinks right here, and
All right.
good.
Time
There
to-
you go. There we go. Where to put
If
this?
caffeine, man, gotta love it. Do you want to do you want to start off with the main order of business, or do you want to hit the Nebius CoreWeave Data Center Nasdaq 100 stuff real quick?
Yeah, let's cover the small stuff, I think, while people roll in,
Okay.
and then
Yeah, and we got to talk at SpaceX. And you surprised me with what you said about SpaceX.
I don't even know,
Uh,
but sure.
yeah. All right. So Nasdaq 100 it made some changes on Friday, and so there were some deletions. Not too interested in those necessarily. Some interesting changes. So of course, I don't know Astera Labs much. I've heard of them. That's it. Teradyne. It's what's happening in the automated testing equipment market. They're one of the big guys. I was actually surprised that they weren't already there. Rocket Lab, of course, which we'll talk about implications for other space names and SpaceX's debut here in a little bit. But congratulations for Rocket Lab shareholders yet again. And then Nebius Group. And then I don't know, like, have you heard of this company before?
Oh,
I don't know why, like, all the focus goes on Nebius and Iron, but like, yeah, CoreWeave also joined the Nasdaq 100.
yeah, they're like Nebius, but smaller. I know them. Yeah, they're like not the biggest in space, that's for sure.
Bigger by actual revenue, bigger by capacity, bigger by build out, smaller market cap.
Yeah, exactly.
Interesting. Both did really well, of course, on Friday as this news was announced. Rolling into today, CoreWeave, of course, had a little bit of dilution. Like these names are going to do that. They have their different strategies of doing that, which is why it was down on Friday. Or I guess it wasn't Friday when before the news came out. So, but yeah, regardless, did this surprise you? Were you seeing that this was coming? And was there any other news related to Nebius because it did quite well today?
Yeah, I mean, it was kind of crazy the additions. Somebody at Nasdaq 100 must be like following Finex because this is like it was a good day, man, for data center names, Rocket Lab. Like these are some pretty retail favorite names. Let me turn this up actually. Yeah. So,
Yeah, Astera Labs is the only one that kind of is the odd man out, but I'm sure there's people that follow it passionately. I'm just not familiar with it other than the name. So, but I was like, wow, I know these companies. That's really cool. And of course, it tends to be accretive to price action. Not that I think the data centers or even necessarily Rocket Lab or Teradyne, who have been performing very well, have needed that. But okay, I can turn it down.
yeah.
Let me know if this is better, guys. I previously had the mic down and I wasn't picking up, I guess, enough, and maybe I'm just too excited. So,
Oh, hold on. Let me turn on my AC because it's friggin' hot here.
all right.
Sorry, you can talk to them for a sec.
Yeah. So, as far as the data centers, I guess just to cap that out, like all three of them kind of moved a bit together earlier today, and that will oftentimes happen. But like the demand is absolutely insane. We touched, I think, very briefly on our show earlier in the week where we talked about the watered down mythos model, Fable, for Anthropic. I don't know that we got very deep into that. I don't know that we want to on Friday's show, but that thing is a. Did you see the announcement about it and some of the discussion about like what it's capable of and how token hungry it is?
Yeah, I saw it, unfortunately.
Unfortunately, what's your takeaway? You have a different takeaway than I do.
This is much better, actually. Honestly, man, I'm just so like tired of Anthropic playing us for fools we know that the model can get so much better because it used to be very good. Like I was incredibly excited about Anthropic when 4.6 was out, and now you have all of these supposedly better models, yet they consume way more tokens for way less efficiency, actual efficiency, not slop or anything like that. So it just seems as though like clearly they're compute constrained. Like that part is very clear. But then the other part of it, Roy, is that like they're playing it off like, oh well, we're best in class or this, and like they're also taking Fable off of the plans.
Yeah.
So if you think about it from that perspective as well, like they're telling you flat out that they are compute constrained. I just like I don't know. If I go back to Cursor or Codex or one of these or Gemini, at least it's very honest about what it provides and what the limitations are, and it's consistent versus with Claude, every new model, it's just like a shot in the dark. I can't even look at the benchmark stats anymore because like I read this thing that like one query was like $20 based on like compute. It's just insane, dude. And so it's just like, what are we doing here, guys? Like, I think we're losing the plot a little bit.
Yeah. So there's two things. That's one of two things I wanted to talk about as far as the LLMs and the models. Of course, we'll talk and pivot on their future IPOs, and then we'll talk SpaceX too. So benchmarks, like this wasn't too surprising. This was just let's see, who was he with again? Every CEO at Every, but he had a really good review, which was like just so that's why I'm pulling it up. But yeah, it's not too surprising when the benchmark score is broken. Like it, almost every new model does that. But what was interesting is as far as it's very slow and token hungry. So like it's amazing on what it can do. So don't take this as like, oh, it's a terrible product. But using this thing for regular knowledge works like regular knowledge work is like squashing an ant with a rocket launcher. It also routinely uses 500,000 to 1 million tokens on tasks. That's why it's best for your heaviest jobs, but it's not as good as tasks like collaborative writing. And this was very clearly written by AI, so it's a little bit ironic. But yeah, it's expensive, twice as expensive as Opus, token hungry, good for inference. But I think that like my read on this is that models are going to get more specialized. That there will be generalist models that are used, just for regular people, regular days, and then there's going to be very specialized, and there already is. Like Harmonic is one of those examples where it's focused very much on math. This would be used and very useful by some people, but with the pushback against token maxing of companies like Uber and others as well, you're not going to see a lot of companies are just like, hey, yeah, use all the tokens you want, because then they'll be doing equity raises as well just to afford the tokenomics. But yeah, this is a great thing, like just showcasing the demand on the inference side. There's going to be a lot of products like this that drive that.
Look, I think a lot of the people who are very deep in this world and they're using the models daily and they're horse racing models against each other, they're going to notice what Anthropic is doing very clearly. And I think it's going to rub a lot of people off the wrong way, where it's more untrustworthy today than it was before. It's just like, guys, just say you're compute constrained, double the time for you to roll out a new model. But when you do roll it out, like actually make it efficient and effective, as opposed to losing one or the other and then slapping lipstick on it to saying it's going to be the best thing ever. Because what is happening is you're competing with these other competitors in the space that are not doing that. And at the end
Yeah.
of the day, like I care about what is the most efficient, model for me to use in my workspace. And the peak for me, Roy, was 4.6 or maybe 4.7. Like sometime in February, that was peak. I was like, this is amazing. It barely hallucinates. It doesn't produce too much slop. It's so effective. It's not super consumption heavy. And then what happened was they released 4.8 and they nerfed 4.6. And then 4.8 was like, or sorry, they nerfed 4.7. And it's like, the models, like they released a new model and they made all the other models worse. And that trend has been continuing since February, March, and to the point now where like, Fable is completely not going to be in the plans anymore. Like, I think it's only going to get worse, not better.
So by worse, do you mean performance? Do you mean cost? Do you mean like what do
Both.
you mean specifically?
Lower performance for higher cost.
In performance, like what like performance? What do you mean specifically? Like you would ask it the same function and it would just take longer, or are you saying
Or
like the output is worse?
more slop, less value.
Okay. And that pivots into the next topic that I wanted to hit on this. This was a really fascinating study. It's like 20 pages. I read through all of it. Cursive recursion training on generated data makes models forget. And I could pull it up, but I don't think I will. But this was an Oxford and Cambridge paper that came out fairly recent. I think it was back in May, if I remember correctly. And essentially what I think that you're observing, and a lot of other people are too, is it used to feel like these models were a lot more human, and there's this phenomenon that the more the models are prevalent, the more agents are actually on the internet, the more content is not human created, but it is AI created, and so essentially this is a model diffusion. So you're now having AI models that are training on AI data, and so he goes in like this study talks about the head and the tail, that the irregular features kind of erode over time, that there's a way to like store memory, store certain things, and then that slows it down. But they've not really necessarily figured out a fix for this. And at the same time, we're seeing increasing amount of traffic on the internet be AI, of course, agents. I think that trend is only going to continue. And so, they're calling it model collapse. I don't know if it's necessarily model collapse, but yeah, there's a lot of samenism with what's happening in AI. And the paper is like, if you guys are interested in the space, if you're invested in this space, it is well worth reading. Again, it's like 20 pages, and anything you don't understand, just run it through a LLM model, and ironically, it'll help you break that down. But yeah, there's a few terms in there I'm like, I hadn't heard of this. So do you think there's something more to that going on from what you've experienced? Because I've experienced the same thing, where I've been kind of surprised at how lackluster some of the models have been versus 6 months ago. Same exact model or very similar, and it seems worse. And I think maybe part of it is, some safeguards that ChatGPT and others had to put on just because they don't want the AI psychosis stuff to become widespread. But is this what's going on?
You know what it is, Roy? It's not the fact that the models themselves are worse. It's the fact that they're watered down. And this is gatekeeping to the point where these companies, and maybe some other companies within their space, like they get the premium stuff. And it's almost like, we've started an AI drug addiction. They got you hooked on like really, really good, pure stuff. And now it doesn't matter. They can cut it, they can water it down, they can dilute it in any way they desire. You're still going to use it, but you are going to notice the quality differences. And so that's what I think it is. Like, it's not the fact that we haven't achieved the technology sufficient to make these models as good as they can be. Like, I think the Mythos model is objectively amazing, but nobody in the public domain is going to have access to that level of like unfiltered, unadulterated AI LLM firepower. They're going to water it down, make it more inefficient so that they can maximize the amount of revenue that they make. And I think it's just a business decision at the end of the day. It's not a pure, altruistic thing.
Do you think these will get nationalized at some point? The models?
I hope not.
Companies? I hope not either.
I really hope not.
There's been talk about it, and I'm like, oh man, like it's bad enough. Like it's weird enough, I should say, not necessarily bad, because there are some positives to having like a governmental stake in some of these companies like Intel. But like this is, I don't know. We'll have to see how it plays out. This last little bit related to the models and the implications here. It's something we were talking about back in late 2024. Certainly last year it got a lot of attention. It was one of those times where before Google really started running, Gemini was doing a lot better. I was very concerned for Google because of this factor right here. And if you could throw that up, Tevis. So the model that the internet has been built upon is an ad-centric model. That's how content creators are paid. That's how web pages work and function. That's how they're able to offer oftentimes free access to a lot of people. Most of the web is free and free to access. And that begins to break down when you shift away. This is going from 2016 to 2026. So don't read too much into the acceleration, but it has changed substantially, even from 2024 to 2026, where the vast majority of searches now result in 0 clicks. Now, there's several different factors of this, but a big part of this is simply that agents are crawling the web. And also, when you're searching for things, of course, Google is a big part of this as well, that they come up with like an AI result that may contain links. Oftentimes it does, but people aren't clicking. They're like, nope, it's good enough. What I'm afraid of here, Tevis, is that this will break down the basically the free web. I don't know if this means that all of a sudden there's going to be like walled gardens and you'll have to pay for access, or if the LLMs will do the paying and it'll be a microtransaction each time. There's been a lot of different solutions that have been proposed on this, but it's not necessarily something that means that the internet's going to implode in the next like 12 days. But a few years down the road, there's some challenges here. So, what are your thoughts on this, and any implications you take from that regarding like LLMs, companies, and of course inference?
What does it mean, 0 clicks?
It means that you search for something and the results pop up and you don't click.
Yeah, but like even if LLM was crawling the page, it would click on the link to read the article or to read the content of the page to provide a response. So it would still click.
I don't know. Well, so I don't think that's the case here. Like, I think that maybe some models operate that way, but a lot of models don't necessarily go back and click through every single time. That they basically like, I was just there like a microsecond ago, so I'm good. So I think that that's part of the shift, if I understand correctly. If not, let me know.
Yeah,
But like even there, like if it was the LMs crawling there directly, and it's a page that is free and free access and is supported by ads, there's no ad revenue to be made on that.
yeah, yeah. That's fair on the ad revenue point. I mean, look, I think the attribution from affiliate perspective, you can still have that in an LLM world because the results that Gemini would provide or Claude would provide would also have the links associated with that or the product pages associated. And there's companies right now that are optimizing for chatbot SEO. So I forget what the actual term is, but there is a term where it's just like the searchability of agents specifically. So you had SEO, which was search engine optimization, where if I use certain terms, those terms are popular terms and they're more likely to get indexed higher on the page so that when I search for something on Google, I show up on the first or second page as opposed to like, the 20th page. Yeah. And now there's GEO, which is the
Thank you, Nate.
Gemini engine I don't know, Nate, what it stands for, but essentially
Generative engine optimization.
there you go. Generative engine optimization. So these are the ones that optimize for how the LLM works or how the model works, where they can essentially show up in the first searches when I'm talking to Gemini, right? So I still think that affiliate world will still exist. It's just a matter of these ads that live within those pages themselves. It's like the BuzzFeeds of the world are going to die because they live off of, banner ads and sidebar ads and all this stuff. Do I care? Not really. Like, will people still use Facebook ads and Instagram and Meta and WhatsApp? Like, yeah, absolutely. I still think that's going to be fine. Will people still use Google ads? Yes, I think so, because Google also owns Gemini. And so you can offer a product where it's just like, hey, you want to get your plumbing company ahead of the other 20, plumbing companies that are competing for your money in Houston in this particular area? Great. Here, tick this extra box, and Google will also, within the ad, optimize it for the generative engine optimization, right? So
Yeah.
I think the large players are going to be fine. It's just like the we've been seeing this actually, Roy. Like AI might accelerate this, but it's not the fact that AI created this because, like, what Bloomberg, New York Times, like all of these are going subscriber only and they're locking stuff behind subscriptions because it's more predictable recurring revenue as opposed to the ad supported model, which is like it lowers site performance. The user experience is absolutely horrendous. And at the end of the day, the actual revenue, having been on the other side of that, how much money you make from ads, it's literally pennies. And I think it's an inferior business model, and if it dies, it dies.
Yeah, oh no, I agree. It's an inferior one. I'm not sure that the web should have been built in that, but Google dominated that model, and then they dominated search. So it's what emerged. And the hard thing is, like, usually between the time when something dies and when it's replaced, there's a vacuum, and it's going to be really interesting to see what the internet actually evolves into. But there's a lot of potential implications from this. There's some, like, Cloudflare is one of those that had advanced several different solutions, but part of it was that they're able to, with their domain, like, you can click and toggle and basically restrict agents from crawling on there for free. You can set up a toll for agents specifically and not for human eyeballs, where you're getting paid in microtransactions. Enter stablecoin because they're really good at that. But there's a lot of different solutions and models out there, but there's going to be some pain points along the way to figure out. And it'll be interesting. Like, regardless of what happens here, like, is inference impacted? It's just going up. It's like the internet.
People will still have the demand for goods and services. It's just how are they served those goods and services when, instead of it being like it's like proactive versus reactive model, right? Like the entire internet is there. I just have to query the thing, and then I have to go into each article and read, like, or add like the word Reddit to the end of all my searches, which honestly, bull case for Reddit, because every single search that
Yes.
I actually want real results, I just add the word Reddit and I get way better results than anything else as a proxy. So I think that's the genuine bull case for Reddit in an AI world,
And
whereby
Meta.
and Meta, sure, yeah. Like the more accurate the results, the more it meets my need for what I'm looking for, the more likelihood that an ad will convert because it has some product market fit. Now, in a world where we're moving to this different model, where now the AI is doing all of this work for you, how do you still find that product market fit? Like this viewer is saying it's a butchering of funding for the websites because AI summary doesn't fund the websites which it is summarizing. Well,
Yes.
okay, sure, I get that, I understand that, but at the end of the day, like if we go to a janky, like if we go to a Reddit thread where I say, hey, what is the best electric razor for men? Reddit, and I go to that thread and I read through that, and somebody suggests, hey, you should get the new, Gillette whatever on Amazon, and I just open a new tab and I go to Amazon and I get that. It's so incredibly difficult to attribute that because you found it from a forum. And so, like, there's
Yeah.
plenty of cases like that are completely organic, that result in real purchases of goods and services because they're genuine customer reviews that arguably are the stickiest method, right? Because you have the social proof built in. So I don't know that it's like a one-to-one comparable.
Yeah, no, and I agree with you. What's really going to be interesting, though, is, like, one side you can see companies that built their company or a lot of their business around the ad-centric web model, and they're in trouble. They got to figure something out. And then companies that have human created data and have a treasure trove of it, which, like, even companies like New York Times has that in the past. Like you said, a lot of those paywalls are going up. Reddit certainly is a big depository. X is one of those. They have something that I think a lot of AI and AI agents and LLMs will want to train on, to make sure that it's not data that has been generated by AI. Otherwise, you get into that diffusion. It'll be really interesting to see, though, what new models replace that. Like, okay, so, like, with Reddit, real quick, since you brought it up, like, I'm more libertarian than anything, so it leans pretty extremely left in a lot of ways, and but
Yeah.
I'm a big boy at the end of the day. There are some really good things on Reddit and good domains and some good information. So on, I can see like a double benefit to them, even though the market's selling them off. That first, real humans are going there with real human eyeballs looking at ads, and that seems like it's going to be persistent and consistent. And second, they have a lot of human created data,
Yeah.
which AI and AI models are using and have access to, and of course they can monetize that. They have monetized some of that too. So are you at all interested? I know that there's several other content creators that have talked about this. Amit has gotten in, I think, in Reddit, if I'm not mistaken, or at least he was looking into it. I'm kind of mixed just because of my similar view with like Facebook with Meta, social media stuff. But I don't know. It's an interesting, it's trading down. Let's see, year to date by about 32% down year to date. PE ratio, current PE ratio is 46. Forward is lower. But are you interested in that at some point?
No, I'm not interested in that. And the reason why is because I'm very, very bullish on the data that Reddit is sitting on. And I think that it provides the most accurate results. Like, okay, I get the political side. I'm not arguing against that. I agree. I've seen a lot of, let's say, one sided political opinions or political discourse on Reddit, especially because it is heavily moderated, user moderated, but still moderated. Um, a whole bunch of subreddits just get banned every day for arbitrary reasons. And dude, the reason I never opened a Reddit account or post on Reddit is because every time I try to do that, there's like a rule book that is just like, hey, welcome to our subreddit. Here's the 50 rules you have to follow before you can start to post something. And I'm just like, dude, I don't want to freaking like jump through all these hoops. Like, first, you have to like 100 posts. You have to comment on 100 posts. Then you have like, it's just, this is crazy. But the reason why I love Reddit for product searches is because it is the most direct to value option out there for me that I've found. I would not be using Reddit if all of these, promotional articles, influencer, whatever, affiliate, whatever, all this like content, like SEO, I think muddied the water for people getting real results because it changed not the rules of the game, but it changed the objective of the game. As a result, Reddit became the best option because we can do an experiment live. Like I can go to Google and I could be like best electric razor, and I guarantee you, Google will throw me like 20 articles written by some dude collecting an affiliate bonus because he does a tier list every year of electric razors. Or I can just go to Reddit and then I can just look at the highest upvoted thing and I'll be like, cool, let me search that. Right. And then I go to Amazon and there's social proof there as well because it's like, oh, this is rated 4.8 stars. Great. I limit my risk there. And so for product searches or for things like this, there is a real power in the community upvoting things, regardless of the political leaning of the individual. It's like a quantitative exercise, right? Like, what do 1,000 guys think about what is the best electric razor? It's that opinion is not going to sway too much based on their political leanings, right? So I do think there is value in Reddit data for the purposes of AI. I don't love how they make money without AI, and I don't really want to just bank on the AI case in general to like put an investment behind them. Like, I don't think that's a strong enough reason because, like, what I'm like putting my money on the off chance that they're going to get acquired or what that somebody's going to pay them to use their data. Sure, but I don't know. It just seems like the risk reward doesn't really line up because like I don't like them for any other reason as a fundamental company.
Yeah, I think it's just as simply as pay for access, like LLMs paying for access for agentic access to crawl Reddit data because it is valuable to them. Pay for training. You can't just scrape the data anymore. You actually need to pay for that. And then third, real human eyeballs on real advertisements. And as that model is deteriorated because agents are crawling all over the place, you're on there, though that ad space becomes a lot more valuable. So like I'm not like rushing to get in. I don't have a position. It's now though on my radar and I'm like, okay, maybe I just need to keep a watch on this, see how it plays out. I don't know that I'll ever get a position, but last year, if you asked me if I was interested in Reddit as far as a shareholder, I'd say absolutely not. And now I'm like, I see it. I see what Bulls are saying. I see we have a mixed view in the comments, and that's a good place to be. All right. So, anything last things on that, and then we've got to talk about the big IPO.
Um, yeah, I just wanted to bring up this comment. AI is going to take that info from Reddit as well. Like, I think you're saying the bull case for Reddit because like AI,
Yes.
like OpenAI got in trouble for this. They were scrubbing without like they were scrubbing IP and like books and stuff like without attributing anything. And I think this is where the legality and the ethics is going to come into play, whereby if AI companies want the training data, they have to pay to be able to use that. X is a perfect example, by the way. You know how easy it was to scrape from X historically? Like I could link up a bot, and I had this. I had a Discord for SoFi members, and I linked up a bot where I was just like, "Hey, these are 40 accounts that I curated myself. If any of these 40 accounts post anything related to SoFi, throw it in this Discord channel." I can't do that anymore without paying some subscription to some third party because Twitter locked up all of their data. And so what happens when Reddit locks up all their data, or maybe they already have? I'm not sure. But the point is like the thesis is that AI companies should and will pay Reddit to be able to scrape their data. Um, and that is an ever growing pool of data because people still use Reddit, they still add more opinions and all this other stuff. So I think you're highlighting the bull case there. But yeah, let's go to SpaceX, right?
Yeah. All right. So, largest IPO in history was, of course, today. Let me pull up I'll just pull up this simple chart.
Yeah, SpaceX is officially larger than Canada.
Yeah. Yeah, there's a lot of fun and funny facts here. We haven't quite gotten, you can see the market cap 2.11 trillion to the point where it's the same market cap as Amazon. It might do that on Monday. It won't be for long, it won't be forever, but it might be for a little bit of time. Of course, the IPO access price was 135. They had a fixed IPO price, and as a result, they didn't increase that despite oversubscribed. It's 20x or 4x versus some of those last summer were 20x. There's a lot of speculation on whether or not this would actually do exactly this today. I did a lot of research entering this, and there's no guarantees, but I was expecting somewhere between a 20 to 30% day. I'm going to count that as a yes, I got it, even though it's 19.22%. Close enough. We'll include the after hours. There we are at 20. But regardless, did anything? I guess first we'll talk about implications. We'll talk about Musk. We'll talk about Tesla and possible like what might happen there with that business, and a few other little fun facts. But was there any surprises for you today on SpaceX? And then talk about what you did, what your position is.
Sure. I don't think there was a lot of surprises. I mean, the surprise is that normally when you have an IPO like this, it just blows the roof off and is like up 150, 200% on IPO day. With SpaceX, we didn't see that. It was up 20%. And partially that's because it's so large, 2.5
Yeah.
trillion. And then also partially, I was like, that's the surprising part. Like I was seeing all these things were like, oh, well, in secondary market, and I think I even said this in last podcast, like secondary markets, it's 180 and it's 4x
Hype. Yeah.
oversubscribed and all of this other stuff. And like what I did with my position, Roy, was I went into my broker yesterday and I withdrew my interest to get IPO shares because if I get IPO shares and I sell the next day and my broker permanently removes IPOs from me, I was just looking at SpaceX and all the hype around and I was just like, I don't think this thing's going to be like worth it to be able to for me to ruin that relationship with my broker. If it's like Anthropic or something, like Anthropic would be the only other one that I would want to do this with and potentially go through with it. But with SpaceX, like it was very validating when I think I ran the math at like 175 uh, or whatever, like something like that. And it was like, oh, you'd have a 25% gain. And like 25% gain is good on like 100 shares. It's
Oh yeah.
whatever. But like, okay, cool. Now you can never do IPOs again. And so I was just like, you know what? Let me not do that. Um, do I think SpaceX is honestly? I'm just glad it's freaking out. I'm glad it's out so that we can stop talking about it and we can like move on with our lives. Do I think it's going to go up or down? I don't care really that much. Elon's the first trillionaire in the world. That's wild. I'm closer. We, Roy, are closer to our net worth to Jeff Bezos than Jeff Bezos is to Elon. So,
Says you, the billionaire, but yeah, I mean,
I mean, yeah.
but
So,
no, that's true. Yeah, that was one of those implications that I thought was interesting. So Elon Musk became the world's first trillionaire, roughly 3.5% of the U.S. GDP. His SpaceX stake alone is worth 866 billion. That's larger than the entire net worth of almost every billionaire on Earth. If Musk were a public company, he would rank 13th largest company. It's crazy. Now, I did see Kryptonite's comments about, oh, it's not the world's first individual that's a trillionaire. We're not talking about a family, a conglomerate, a kingdom, whatever. SpaceX, I don't know if it's still the case, but SpaceX's market cap was larger than the GDP of Canada. So that was one of those fun facts. It's larger than, like if you're looking at a trillion companies, like this is one where, yeah, it's at 2 trillion. You could definitely see a scenario where it's like worth, half of where it's at or even lower. But like this is going to be one that over the long term, if we're looking at like 3 to 5 years out, it's going to probably be in that $1 trillion club. It's going to be like Tesla, where it's volatile. Maybe it'll fall out of favor and down a little bit. Now, the way I played this was I got 3 shares. And mostly, I talked about before. I wanted to participate. It's exciting. It's a company that I really admire. I respect. I had a friend that nearly worked there, and I kind of wish he went through with it just so I could, cheer him on and everything. But I'm like, hey, this is a participation trophy mostly. I don't expect to necessarily make money. I do think like if you buy and hold SpaceX in 10 years, you're probably making money, but you're going to underperform the broad market. But largely I just wanted a little piece, and I figured if I ask for 3 shares, I'll get 1. That's enough of a participation trophy. But is there a price? Okay, I guess first, yeah, as far as surprises, it acted like a typical IPO. The larger the IPO, the more revenue that they have as well, the age of it, all those are factors that usually reduce the amount of volatility and reduce the upside as well from that initial day. So that's why I was expecting 20 to 30%. But it's hard to say. Like this is the largest IPO in history. Do you think we get some continuation on the price action to the upside, or is next week the beginning of the decline for SpaceX? And if so, where do you see it possibly bottoming out?
okay. I think next week will slowly start to be the start of the decline for SpaceX. I could see it bottoming out around psychological levels like the IPO price, 135. I could see it even going to 100 or even below 100. We'll see. Obviously, these things are not really measured in days or weeks. They're more measured in months or quarters. However, Roy, one prediction that we had with regards to SpaceX, do you remember what it was? It was that other space stocks would sell off on this news. And I'm not talking about Virgin Galactic that was down 25% today on the news that people realize it's the wrong ticker. I'm talking about ASTS, which was down 15%. And ASTS is trading for $82 right now, down from the highs around 133. So it's trading at a big discount from the all-time highs. And guess what else is down, Roy? Rocket Lab is down 10% today, trading at $100, down from $151 where it peaked. So SpaceX similarly sucked all the air out of the room for other space-related names. And that makes perfect sense because they're the biggest player in the space. And now that they're publicly available, people will want to go to consolidate into the biggest player.
Yeah, I mean, like there's part of that, and obviously, if somebody's interested in space, there's not that many names that are like fascinating, and interesting. But yeah, let me just run down like the price action. So SPCE, the wrong SpaceX, the meme SpaceX, Virgin Galactic down 31.76% actually today, continue to falling after hours. SpaceX, we already know. Rocket Lab, you mentioned 10%. It's up about 2% after hours. Voyager, which I've been interested in the past. I don't think I'll ever be a shareholder, but it's a pretty cool company. Down 14%. ASTS down 15%. It is up after hours 2%. And then Fly, which I'm getting interested in, and there's a price where I might become a shareholder. It's down about 20% as well. Yeah, this is one of those where eventually you're going to see SpaceX and these other space names kind of be lumped into a basket together, much like CoreWeave Nebius, IRIN, and all the other smaller data center plays where there's news that comes out for one that just only affects that one. All of them move in tandem a little bit, maybe not as much as the one that the news is actually broken in. But right now it's strong inverse correlation. So I think that we might get, options chain. I think Tuesday is when it's expected to come out. So it'll be interesting. That's per CBOE. Because I was curious on that. I'm like, okay, I got to know. Not that I'm going to play it for options, but there is a price, if we see it plummet. Now, I think sometime this month, we're going to for sure see it not just retrace to 135, but actually fall below. Very, very good chance of that, especially given where its valuation is versus its fundamentals. It wouldn't surprise me if we see Monday, maybe even Tuesday, as continued upward momentum for a little while. If so, I think this inverse correlation sticks, and we see these other space names continue to decline. And so I'll just say this: like if you guys and Tevis, and I'm saying this to myself as well, if there's a space stock or multiple space stocks that you're interested in, now is a time to set alerts and pay close attention, because you might say, well, I missed Rocket Lab, I'll never see it again. Well, it was not that long ago. Let's see, it was 151, now it's 102. I think it's still pretty expensive here, but you might be like, it'll never get back to $65 a share. Set an alert. Sometimes the market surprises you. I don't expect it to fall that far, but if we see continuance of this, we might continue to see some outflows from these other names for a little bit. Now, I do think that within the month that stabilizes, and then you'll see, of course, SpaceX being the largest player in the ecosystem, but you'll see all of these move a lot more in tandem with SpaceX instead of opposite. Are there any that you're interested in, or that you're doing some research on, or that at a certain price you'd become a shareholder at, or is Matt Money going to forever hold that over your head?
I mean, when you put it that way, I don't know, man. I'm not huge on the space trade, and it feels so far away to me, and I'm in the minority, I think, at this point on that, because they've caught fire throughout 2026. ASTS looks interesting, although I need to do way more homework on them. I would say that they would all need to fall quite a bit, because I mean, for these ones, in anticipation of SpaceX, that's a trade we should have seen.
Yeah.
Roy. I think that's a trade. We've not only because Matt told me about Rocket Lab in 2023, and at that point, SpaceX going public was not even on my radar at all. But in 2025, when he was talking about bringing SpaceX public next year, because he did mention that, this is where we should have been buying other space companies in anticipation of a rally up and sympathy rally for SpaceX going public. And so, I think if there was a swing trade to be made, today was the day you exit that swing trade. And I think that's partially the reason why we saw that sell-off in the space stocks. Is it could have been a pure momentum play in anticipation of SpaceX. So I don't know to what degree I might get into space stocks, but I think that space stocks have a definite level of froth associated with them right now. And I don't know what's the actual substance and what's the actual, excitement-induced froth, let's say.
I know how to get you more interested.
What?
Think about froth and what investing style that benefits from that froth and that volatility. Options.
High premiums? Yeah.
Yeah. I mean, I can see you becoming a Rocket Lab shareholder because the premiums are pretty juicy. And if this price action keeps up, boy.
Look, man, believe it or not, I was a Rocket Lab shareholder, and I did make money on premiums, and my shares got called away. And I did make money on Rocket Lab through cash secured puts and covered calls. But at that point, Rocket Lab was in the $20 and $30 range. And what have I made? I made like 300, $400 on Rocket Lab. That's the
Yeah.
extent of it. But
Better
this
than
is a
I
lot.
did. Yeah. No, there's some that I'm looking at, and I also need to kind of figure out over the next 6 months too. Like SpaceX is one of those where I'm interested. Like I don't think it'll ever fall to a place where I'm like very comfortable adding a meaningful amount of shares. I'll probably just hold on my 3 and call it a day. But IPOs can surprise you to the downside too. That 6 months later, if we're sitting at a SpaceX that has a market cap of like 800 billion, I think that was Morningstar's approximate value or something like that, which is, it's hard to value honestly because their forward revenue is way different than their past revenue, but some of that's temporary just because of the data centers being able to sell that. Do you believe in the fab, the terafab that's coming online? Like it's a tough business to value, but if we see it like at that, which would be not quite cutting a third from where it's at, I got to take a serious look. So yeah, that's insane, Rob. Thank you for pointing that out. I forgot to look up the amount that was traded at close. So that's an insane amount. You know who wins from that? Brokerages.
Insiders? Oh, brokers.
Brokerages,
Yeah.
insiders too. Yeah. There's been pushback. There always is. When Elon makes more money, he's already the richest. How much does he need? The reality is, like, there are welders at SpaceX that are now millionaires.
Yeah.
That's amazing.
Elizabeth Warren can go shove it somewhere, but over 4,000 millionaires from space, probably more, honestly, from SpaceX IPO alone, just ordinary people who have just been there a long time and been accumulating shares. And then, this woman comes out saying like, oh, so-and-so is making so much. It's like, dude, like, yes, he's making money because he's providing value because this company employs tens of thousands of people and they're actually doing something, right? Also, for the people that are asking, options trading on SpaceX starts on Tuesday. So,
yeah,
Roy,
per the CBOE. So, yeah.
I mean, look, let's just say options trading on SpaceX starts on Tuesday. What would be the play here? I mean, you could pick anything, long, short, whatever play. What would be the thing that you would be interested in?
If I had 100 shares, I would sell calls probably in the money. Expecting like a month out, expecting a downturn. The premiums are probably quite nice. I wouldn't want to write cash secured puts necessarily. Like it's far higher than where I'd be comfortable owning a meaningful amount of shares. And 100's meaningful enough, that I wouldn't just like throw away. Like if it's trading at 120 or something, it's a chunk of money. So, but if it falls, it gets to the point where it's starting to look more attractive, like it is $100 a share or something like that. I might write some cash secured puts. I probably wouldn't though. The volatility is going to be so high. Buying options, like I know there's people that might be tempted to just write naked puts. So basically, it's a downside bet on a big movement for SpaceX. The problem is IV crush is a real thing, and the IV, I'm sure we'll see when the option chain comes out. We'll take a look actually, maybe next week on the show. It's crazy. So even if you're right on the downside being soon, which it's likely, you might not make much money if at all. So yeah, 3 shares, yeah. Save some for you guys, right?
I don't know what the right way to play it would be.
Maybe staying away.
I mean, we're just having fun with the game here. I don't think either of us are going to play options on SpaceX on day one. Like, yeah, maybe it is selling naked calls like in the money at like $130 a year from now or $120 a year from now, and betting essentially that it's not going to be higher than that amount. I don't know. I mean, a lot of people are going to be buying puts on this. I think you're right about that.
Okay, so let's talk Tesla, which of course it is related to the SpaceX play. A lot of speculation, including on my end, that there would be a lot of outflows from Tesla. We did see it last week, but that could have just been macro related, not necessarily pivoting from one Musk company to another. Do you think that these two companies end up merging at some point? There is a predictions market on it. I'll pull that up while you're answering.
Yeah, I mean, look, I've mentioned in previous podcasts that I think they're going to merge sooner rather than later. And the reason why is because Elon has like roughly 80% voting power in SpaceX, and he has a fraction of that in Tesla. I think he has like less than like maybe 15%, something like that. And he ultimately wants to have as much control as possible in the combined entity. And in order for them to do that, well, SpaceX is 2.1 trillion right now. Tesla is 1.5 trillion. SpaceX has leverage over Tesla. They can do a merger of equals, but the way the because the market caps are different, SpaceX is bigger. The way that the voting power will shake out is Elon will get more ultimately. Not to mention that Tesla already has an investment in SpaceX, so
That's
it's
a good point.
already
Yeah.
it's already a connection there. So
Yeah.
I think it's smart for him to do it sooner rather than later, because if we believe that SpaceX is going to be at $100 6 months from now, well, then all of a sudden he's going to lose some of that leverage at the negotiating table.
Yeah. No, I think that shareholders probably want it. I think that also Elon certainly wants it. The challenge is they do need 50% of the votes, not just percent of those that are voting, but the majority, 50.0001, to vote in favor of this. And so they'd have to really get the vote from institutions. I mean, Musk provides a lot, but it's not a guarantee. Regulators might step in the way. Now, what I want to ask you is this. There is a poly market bet. Don't pull it up. I got it right here. I'm going to show it to you in a minute. On whether or not these merge by the end of the year. What percent would you assign to this getting done by the end of the year?
Would I assign, or do I think that is in the poll right now?
Okay, both. What's in the poll now, and what would you say? And then we'll pull it up.
By the end of the calendar year?
Yeah,
Okay, that the merging is complete or that it's announced?
announced.
Okay. I would say 70% that it's announced by the end of the calendar year. I think the poly market poll might have it around 40.
You're pretty close. Okay, so yeah, here is what it is. Amazingly, 4% down 12%. Thought it would be announced by the end of June. I'm like, I mean, maybe, but no. Yeah, December 31st, 37%. There's been a lot of movement, of course, around this. I won't pull that up necessarily. Why would you have it so much higher announced by the end of the year than this?
I mean, I think you have to also keep in mind the forced buying that comes from the index inclusions as well, which is
Yeah.
going to drive up a lot of the value. Um, I think it being announced is like ultimately what Elon is working towards, what he wants with the combined entities. I don't know. I'm pretty confident that it's going to happen, given that all we know around what he said in the past around retaining ownership and having voting power. And I also think it makes sense in terms of just the mind share perspective. Like he doesn't need to context switch as much if he has one sort of uh, senior leadership team across the different lines. I don't know how it would work towards like you know a mission vision perspective, but it would be accretive to Tesla because they can have vertical integration there as well with regards to the build out. I mean, there's collaboration right now, like the new Roadster and SpaceX and Tesla are collaborating on that and sharing resources, engineering, and otherwise. So I think it's accretive in many different ways, margin expansion, and then not to mention like all the compute, right, from the AI plays. That's also an interesting angle that this could take, right?
Yeah.
Because the through line of all this, Roy, is Optimus, right? Tesla sees Optimus and Tesla investors see Optimus as the next evolution of what's going to drive value in the company. And with SpaceX and all those resources, they do that faster.
Yeah. Uh, yeah. I could see like so. I looked at their estimated earnings date. It's going to be late October. Midterm elections, of course, not too long after that. I think that at earliest this might be announced somewhere around then, maybe even during a Tesla earnings call, that they are interested in doing this. If they're going to pursue a shareholder vote, doesn't have to happen in an earnings call. I think he's probably going to want to avoid him and his companies being a talking point or a major talking point at midterm elections, because I do think that the one wild card that could stop this, I don't know that it's inevitable, but it feels pretty close to it, would be regulators stepping in. And in this case, it would be more just because of Elon and the ultimate size of the company, also by market cap, more than, oh, these two companies that used to be apart are now together and they dominate. They're so different, right? Yeah, like coming out somewhere in November, December, late October, possibly. But yeah, the odds actually feel about right to me, that there's about a 1 in 3 chance, I think. You know, if we were zooming this out through next year, I would be really surprised unless, again, there was a lot of antipathy in the political sphere towards such a merger, and it seemed like that regulators might step in. That would surprise me, but I'm pretty sure that by the end of next year, they're going to announce. So
I don't even know on what basis regulators could stop it. It's not anti-competitive, is it? How is it?
no, there will be those arguments made, but no.
Sure. I mean, look, I think where Elon is involved, you're going to have people salivating at the opportunity to take him down, especially with this new fancy trillionaire title. But I just don't see the legal precedent to argue some type of anti-competition when all the segments of the business are drastically different. You have Twitter, you have, XAI and the compute that it's providing. You have Tesla, you have a rocket company, you have Starlink. It's just like you have Optimus Robotics. There's no overlap in terms of it being anti-competitive. Like I don't see the case for regulators potentially blocking a merger.
Yeah, but Amazon was blocked from owning a robot vacuum company. So, I mean, regulators could be stupid. Thankfully, we're not in that environment right now with the present administration, but things can change too. So, on that, anything else that you wanted to share on SpaceX, Tesla, Elon, or shall we hit those Q&As?
Yeah, I think this comment is very relevant. Like, if there is going to be a merger, they would want to do it before Trump is out of office, because that's going to be wildly beneficial to it actually passing.
And they need to, if so, announce well before then. So, yeah, like next year has to be the year. If they don't, it's going to be a lot harder.
Yeah.
Great point.
All right, let's go to Q&A.
All right.
58 minutes.
And as a reminder, guys, for FinTech Friday, not FinTech Friday, old name, Fiesta Friday, these oftentimes are and can be and probably should be market-related, stock-related questions, but we also allow more generalized. So like, hey, what's your favorite whatever? Those are okay too.
Yeah. Great question, Lawrence. Are you adding to Meta at these prices? I messaged Roy earlier this week and I said, Meta at these prices feels like stealing money.
Do you like stealing money?
I mean,
yeah, it does. I'm not arguing against you. I think you're right. I can't do it though. I just can't.
Okay, so at what price can you sell your soul?
Maybe if Meta was trading at $1 a share. I don't know, man. Like, I know it's a little different entering something just as a trade. You're not a long-term investor, even options. You're not even buying shares, but I don't know that I can do it. And maybe it's a little hypocritical of me because, like I said, I'm kind of interested in Reddit now, and there's definitely some overlap there with some concerns I have. So. But yeah, it's a great company, great CEO, positioned very well. They're pretty cheap. Like, I would still rather just buy, if I was looking for Mag 7 exposure, NVIDIA. I think Nvidia is very easy here. Beyond that, maybe start a new position in Amazon. Much rather, even though
Uh,
I think that this might outperform.
yeah, I think Meta and Amazon both. I mean, both are red today. Both got beat down throughout this year, and I think both are going to do well. It's the market. I think is being silly. I also messaged Roy this week, and I said I can 1-for-1 trade 100 shares of Nebius for 100 shares in Amazon, which is wild to think about because Nebius was trading for 236 and Amazon's trading for 236. And I was like, dude, like, I can just switch over like 300 or 400 shares of Nebius and buy 300 or 400 shares of Amazon, like feel great about it, Because I think Amazon is as good as buying treasury bonds to some degree, and
Better.
Nebius is not. And then Nebius is obviously going to grow way, way more, but there's also way more risk associated with that.
Yeah,
And
yeah, no, like I like the way that you put that. Reward is much more potent for Nebius. Risk also is higher, and it's going to be very volatile. Like, yeah, so at the end of the day, like if moving some of your colossal position in Nebius helps you sleep at night by moving some of that to Amazon, which I don't know who like holding Amazon would be like really worried about like a 2% drop in the day or somebody like it's Amazon, like
yeah,
versus Nebius. There are some concerns there, even though it's a great company.
yeah, like guys, you're holding Amazon at $238. Like it's not like it's, oh wow, Amazon is up to $600 and like, yeah, I 1000% agree with this. Like Amazon is going to be $1,000 a share in 5 to 10 years. Such an easy hold. Like if you believe that, then Amazon's a steal of a deal here, and I think Meta is as well. Meta under $600. I mean, it's 566 right now. It's significantly lower than when I sold my cash secured put. Thankfully, my put that I sold was for September, and my break even on that is like 550 ish. Honestly, Roy, I'm thinking about doing another one. Like I'm thinking about running it back, and I don't know because I already have Meta as like 15% of my portfolio as it stands. If those puts get hit, then it would be, larger still. But if I own a couple hundred shares of Meta here and there, like do I really care? Um where's Meta going to go? They have an amazing distribution platform. I think they're going to be a big winner from from the capex that they're spending right now, because all of a sudden, like ads are going to get way more tailored, way more personalized on Instagram. They're going to get way better. Same thing with Facebook. And then you have all this other green shoots that Meta is developing right now. Not to mention that at any given day, when they feel like it, they'll be like, all right, cool, we're cutting our capex. The margins are going to go through the roof, right? We're going to go back to not spending money anymore. Great. Stock goes back up. Like they did it back in what, 2022, when was it Bill Ackman that wrote that letter? No. Was it Bill Ackman? Or no, it was Brad Gerstner.
uh,
When Brad
Gerstner,
Gerstner
yeah.
wrote that letter, you know, they were like, all right, cool, we'll stop spending as much on metaverse, and the stock completely went up from there. So I think at this price, like the risk reward ratio for Meta is pretty good. And honestly, like even if for nobody watching, I'm just talking about Roy. If you wanted to play some spreads on this, Roy, dude, you can do 2028s,
Yeah.
550, 700, $150, room. Probably get a good price for those. I don't know.
I'll admit that I'll need to do some thinking about options and whether I'm comfortable holding those. Like at the end of the day, like somebody is buying shares because I hold the options, but yeah, I'm not buying them myself, so I'll think about it. Yeah, it's got to be it's already I think a very cheap and attractive price, but it's got to be stupid for me to. But yeah, I'll let you guys know. Like I broke my own morals, or like it'll be some splatchy YouTube video clickbait that I'll have Tebis help me devise a title for. So I compromise my morals for money. There we go. Not exactly, but yeah. Anyway,
Yeah, Nick says it's risk reward. You can get a better reward with Zeta or Nebius, but the risk exists. However, if you're long term just chilling and want to sleep well at night, Amazon is pretty much a win. It also
Yeah.
depends on your portfolio size, right? If you're like, hey man, my portfolio is $5,000, I really want to get it to 100,000. Well, I'm sorry to say, buying $5,000 of Amazon is probably not going to get you there. Buying
Yeah.
$5,000 of Nebius or Zeta, it might get you there, right? Probably not, but it might. It'll get you closer, that's for sure. But if your
Yeah.
portfolio is, well, what did I say? 5,000. If your portfolio is $5 million, and you're like, hey, I don't want to put 2 million or 3 million in Nebius. I would rather put that in Amazon. And if Amazon doubles, and I have $10 million instead of five, well, it's like, dude,
Yeah.
that's a no brainer. And I think like most of the people watching fall somewhere in that scale. So it's just like do your own homework and match up the risk, the reward that you're expecting, and go from there.
Yeah, the average Robinhood account size is about 13,000. That's probably close to where our audience falls as far as, probably north of that because, I have multiple accounts. And I know we have some wells here, but, I think we got a lot of like $25,000 range for personal managed money in the stock market. Hopefully you have matched 401ks and taken advantage of that at your place of business. But yeah. I see some fun questions.
Yeah, nothing we say is financial advice, guys. Please.
Yeah, I don't know. I've got concerns with the ad models. It just Zeta is good, I think, but I would actually put Zeta in something more like an Amazon as far as it's probably safer, but it's probably not. It'll probably outperform Amazon, but I wouldn't put it in the same risk reward category as Nebius or CoreWeave or Iron. Lots of reward even here, plenty of risk too as far as price action.
Holy Rob, with another fun fact, SpaceX traded 73 million shares in the first 5 minutes.
Oh, man, yeah.
All right,
Brokerages, man, they're having a good day.
Seriously. Let's continue. Did SoFi get into the NASDAQ 100? Yes. Congratulations, shareholders. Nate asks, did you see that Nebius 2026 ARR is 50% hyperscaler and 50% is their AI cloud? This company is a unicorn in the making. Nate has 90% of his portfolio in Nebius, so I sure hope he's right for both of our sakes.
Yeah, I've been enjoying the run with CoreWeave. I'm glad that it got some participation in the market today, but yeah, like they're both positioned well. As far as where they are currently right now, by the way, when I saw Nate's comment, I thought he was saying that it was 50 billion in terms of AR this year, and I'm like, I was looking for that. I didn't find it. Then I figured out I had a reading problem. So this is where they're at as of Q1 2026 for all three of the big ones. There are, APLD and many others as well that are a little smaller. But we have CoreWeave here, if you throw this up, at 8.3 billion, Nebius at 1.6 billion, and Iron at 134 million. All of these, no matter how you slice it, are going to be much, much higher this next year.
Yeah, guys, trust me when I say I bookmarked your question, so don't ask multiple times. It just confuses me.
Yeah. I will say on Nebius, like the NeoCloud definitely is working out. Like 50% in the AI cloud, those are generally the smaller clients versus CoreWeave has a lot more towards hyperscalers. Microsoft is a huge part of that. They will build out their own capacity over time. So it's not saying CoreWeave is going to zero or it's worse. It's different, but everything is working well for Nebius right now.
Meta generates an annual revenue amount of SpaceX in about 4 weeks.
Not bad.
I mean, yeah. Next question. When Warner Brothers Discovery is removed from the S&P, do they immediately include a new stock or do they wait until the next inclusion? I think he's talking about because these guys are getting bought out.
Yeah. It's immediate when the acquisition is actually finalized. So whatever date that is, they will introduce a new member to the S&P 500. I would say a little bit more than you would just pick from random distribution. It's in that same space and sector, but I mean, I'd say more than half the time it's not. So it could be if SoFi is trading at the right market cap that they get inducted. I think the last one of these that we saw was Coinbase getting in. But yeah, it's been a little while. I'm sure that there has been. I just, I sometimes miss it if it's not a name that I'm interested in yet, either way.
Today's June 12th. Today is when we should be hearing about S&P inclusion. Did that happen after the bell?
Let's pull it up and see.
Can somebody in the chat let us know? Because I'm not like I had a thing in my calendar that June 12th was going to be the day.
SpaceX is added to the standard and large cap index. That's the SPY. So I don't know, or that's MSCI rather. So
Wait, it was last week for S&P inclusion?
I thought it was at the same time as the NASDAQ 100 stuff.
I don't know.
Yeah.
All right, next question. Should I sell my 2 shares of SpaceX and buy half a steak dinner? I mean, you've earned it.
Watch my space video or watch my SpaceX video. Go to the flipping policy if you're not familiar with that. Make sure you read it on your own brokerage first too.
Oh yeah. It was Marvell and about Campbell's. I remember this. Yeah. You're right.
Oh
You're right.
yeah.
We talked about this.
Yeah, we did. Man, a lot of stuff has happened in the last week. So
GD is asking, so do paid users get better, accurate information? I think he's talking about the LLMs. Yes.
Yeah.
You get better. You get access to better models if you pay. So yes.
Better models, and you can do more volume. So yeah.
Why would anyone go to Reddit when you could just ask AI? A lot of people on Reddit, it's like a forums, right? So they share their own personal experience with stuff as well. So you can get more context as opposed to just asking AI and they'll just the AI will be like, oh, this one, you know.
And the replies are like really good there. When I want to know what people are thinking about something, whether it's right or wrong, I can go there. And the great thing is, like, sometimes the OP is just way off, or they're missing something very important. And usually those first few comments that have gotten massively upvoted, unless it's a political thing, they're actually really valuable. AI usually glosses over those.
What's your opinion on selling cash secured puts if you sell them? I'm very high opinion on selling cash secured puts. I do that all the time. Yeah.
Love them, yeah.
Very valuable tool. Thoughts on Intel stock? We get asked this pretty much every week.
Yeah, same as previous weeks. It's one of those that we talked about possibly getting into just because the government was in there. It's like, hey, it feels kind of like free money. I still think that they maybe... I just don't know about the leadership team, and leadership's always a big part of my thesis. So I would stay away personally. We'll see how it plays out, though.
Yeah, Greg, the options are going to be rolling out on Tuesday. So stay tuned for that.
Yeah.
If Reddit is global, then how is it left? I think it's more around the moderation. It's what they moderate or what they remove is like very biased towards one direction, and it's very much like heavy on moderation as opposed to heavy on like just letting it be. So that's why.
Plus, it is global, but it's Western world and United States centric. So,
is the general public's opinion accurate and useful data? No. Well, I mean,
what's useful is figuring out what people are actually thinking. That's useful. And whether they're accurate or not, like it's very helpful. It's very useful. See what questions, see what responses. And it doesn't even have to be something that's like a real world, like huge implication. Like I've been picking up chess again. So maybe like in about 10 years of practice, I can occasionally win a game against Tevis. But like there are some like openings and some things that I'm like, okay, how do you actually refute this gambit? Or what do you do here in this case? And man, Reddit is great for that. And there's a lot of feedback back and forth on it. So, and that's like who cares about chess? But a lot of people do. So,
hey man, the chess subreddit is has some good stuff in there.
It does, yeah.
When does the 3x leverage, short leverage, open for SpaceX? I don't know. I'm assuming at some point in the next month, somebody's going to do it.
What do you think the ticker will be?
I don't know. SPCY. What wasn't it? TSLY, the short one for Tesla?
Well, that's a yield max versions. So
Oh wait, what's the short one for Tesla? Oh, SPCQ.
L.
SPCQ.
Oh yeah, yeah, yeah. There's TSLL too, but
Which brokerage are you using? Robinhood was lagging for me. Yeah, I'm sure all brokers were lagging today because this thing probably had so much demand.
yeah.
Uh, what is your opinion on selling cash on a stock you want to own? If you sell cash secured puts at the bottom, you don't really get a chance to get the stock assigned because it rebounds. I sold September cash secured puts for Hood at 75.
So two things there. One is if I'm writing cash secured puts, I usually do weekly, biweekly, or if that's not available, then monthly, and I'll hit the monthly. So that third Friday, and so I'll do that. Fairly near term if I actually want to buy. If I'm wanting to make premium on writing puts and I don't mind buying, maybe I do something a little bit further out. No, the way I approach cash secured puts, I'm not a wheeler, so I'm not. My goal is not to make premium off it. It's just an added bonus of being able to buy a stock at a level that I would have bought anyway and getting paid some premium. But if I have zero position and I'm like, hey, I want in, it's like attractive here. It can always get more attractive. What I'll typically do is I'll buy half of my position and then I'll write the other half as a cash secured put. And if it doesn't fill, it doesn't fill. Or if it's like incredibly volatile, the premiums are really juicy, you can actually write in the money cash secured puts, which it's more risky there, but there's a lot of reward there as well. And then you can do multiple strikes. You don't have to just say, well, I'm going to do all whatever amount in the same strike.
Yeah, that's what I did with Nebius was the end of money ones. It's definitely more risky, but it was fine with me to be more risky because I wanted to own it anyways. And so when Nebius was trading for like $80, I would sell cash secured puts for like $90 or $100. Definitely don't go that far, in the money, but it's also another way that if it goes up, you don't feel as bad because you made a ton of money on the cash secured put. And if it stays where it is, well, your break-even price is what really matters, because if let's say Nebius is at 80 and I sell a cash secured put at 100, $20 is baked into the price as the difference plus the time value. So you're probably going to get like $24 or $25. And so your break-even becomes like $75, right? And so even if it stays at the same price over the month, let's say it's still at 80, and now you own it and your price says 110, your actual break even is 75 because you already collected the premium for the difference. And then if the stock goes down, well, all of a sudden, then you can write lower cash secured puts and lower that cost basis even further, but you've now been allocating into the stock that you want to own. So that's a possible alternative that you can explore.
Yeah. Yeah. Lots of ways to play it. But yeah, don't make the mistake. Like if you really want to buy and you're like, hey, it's attractive here and you have the money to say, yeah, I can always get it cheaper. Like that's functionally what you're doing is that when you're writing the cash secured put. But I think it's a great strategy that Tevis mentioned. There's a lot of ways to play, or just like, hey, I'll own some and then I'll DCA into it through cash secured puts. Those are like, it's also, I'll say this, like cash secured puts in a bull market, which we are in. I don't think anyone needs a reminder this week. Last week, maybe it was different. But cash secured puts, you can afford to be a little more aggressive on those in a bull market. Covered calls, you can afford to be a little more aggressive in a bear market, although you do have the biggest and most volatile days that are up on bear markets, so you still have to be careful. But yeah, not financial advice.
I mean, for Nebius as well, like, boy, the IV crush is wild.
Yeah.
Do you know, Roy, that like I wrote cash secured puts for Nebius that were $100 out, a week out, and I still got like $1 on them. It's just like it's what the heck is going on? It's just crazy, dude. And like especially after Nebius will run like 5 or 10%, the premiums will get so good. $100 out for like 4 days from now, and it's just, I mean, I don't know. You have those.
It's a good time to be an option seller. Speaking of options, OJ 2025 says, how safe do you think CoreWeave covered calls are for 150 EO end of year so they don't get taken away? CoreWeave was close to 140 before. So with what's happening in data centers, I think that those are a high degree of risk. Could be wrong. Like if you see it differently, what's happening in the space, if you think the debt is going to just overhang on the stock, I think we've seen from the last few weeks that CoreWeave is capable of getting an up bid. So if I was writing covered calls, I personally wouldn't be comfortable writing at 150 for end of year.
I would agree with that. Well, I think 150 seems a little thin to me. You have a lot of time left on the clock.
Yeah.
Did Amazon do cap? Yeah, we talked about this last week. It was one of the main topics. So definitely go check out that video. Are Deca millionaires the new millionaires? I mean, look, man, I think inflation is a real thing. $1 million is not what it used to be 20 or 30 years ago. Deca millionaires, maybe not. Maybe it's like $5 million. Like a semi-Deca millionaire is the new millionaire.
Yeah. Like millionaires, 15, 20 years ago, millionaires usually weren't broke. I mean, but now the reality is partly because of inflation, partly because of real estate value appreciating, especially in some regions dramatically. There are plenty of millionaires who are, have maybe $1.5 million or something, but a huge amount of that is just tied up in their real estate, which is not generating value for them. And so they're not quite living paycheck to paycheck, but they're not like wealthy versus, 20 years ago, if you're a millionaire, you had a really good life. So yeah, Deca millionaires definitely are. That's more of an elite club. Like a millionaire club, I think, and I hope that most of us here would join that at some point if you're not already in it. Deca, that's a rare breed there. For Tevis, he's like, I don't want to go back to that. So no, just kidding.
Guys, I know we're even close to being a Deca millionaire. Let me tell you that much.
I think you'll get there one day, though.
I think so. Well, yeah, maybe.
Nebius wants to get you there.
Here's the thing, Roy. I don't doubt my ability to get there, but I think I'll stop way before I get. I think I'll be fine with much less than that. If I think even semi-Deca millionaire, getting to 5, I could live an amazing life on 5. Anywhere I want in the world, realistically speaking, because your portfolio is still going to generate income for you. It's, so I think your ambition is really going to get stunted by the point you reach $1 million or 2 million, because life kind of gets on easy mode a little bit. Unless you want a yacht and a private jet and stuff. And okay, for those, you're still not even close. But yeah, I think it's easier mathematically to go from 2 million to 10 million, let's say, than it is from 0 to 2 million. But I don't know if you want to put in that same grind, man. I'm 31 and I'm dude, I'm counting down the days till I retire, quote unquote retire, where I can just do whatever I can do my YouTube, I could do whatever. I can live in Europe and have a very chill life. I was actually doing the math today, and I was telling my my friend where I can basically rent a apartment building, 2-bedroom apartment building, Roy, and I can pull out money where my spending money in a week is what somebody earns in a bi-weekly paycheck here.
Yeah.
And all of that together, everything together, is still less than the rent I pay in Toronto. So
that's obscene.
My house rent and spending money of what somebody here makes in 2 months together is less than just my rent, nothing else. So it's just dude, if you do that and you have a 7-figure portfolio, I could be fine never getting to 10.
You need to get a gold visa golden visa to the United States at some point, or get married.
Yeah, well, if I get married, then I think I'll have to get to 10 just to be able to survive, and it's gonna be.
Speaking of marriage, I'm sure you probably know. If not, he's just he's been on Wolf all day. But Tanner is officially engaged. So
really,
yeah.
Did he announce?
I found out today. He announced it on his stream, and he's been live with Wolf all day for that full day stream. So
That's
But
really
yeah,
cool.
congrats to
Congratulations,
him.
Tanner.
Yeah, it's exciting.
I don't think he said
All
his
right, let's
word
continue.
on screen before. So yeah, to the both of them, congratulations. I
Yeah.
got a text him after this.
Yeah.
Tanner Correa.
Amit is single, I think. So,
Roy, I'm coming to Texas on a golden visa. Yeah,
all
well,
right, Charles. Yeah.
I'm in Albania right now, Damien. So it's fairly cheap. Although the local currency here, Roy, is like it's stronger than the euro, dude.
That's
Like
cool. That's
the
wild.
Canadian peso does not add up.
Canadian peso.
Seriously. Nate says SpaceX underperforming in 10 years. I disagree.
This was a comment. I said that Iron would underperform
Oh,
Nebius, and he's disagreeing. He thinks Iron will. No, I'm just kidding. Yeah, it was SpaceX. Yeah, Nate, I think you're right. Talking, I said something that I actually don't believe. I think over 5 years it'll probably underperform. 3 is almost guaranteed. But yeah, 10 years out, I think you're right.
Tevis, why weren't you buying Rocket Lab under 7? Bro, stop rubbing salt in the wound, okay? I was an idiot. All right?
Guilty.
I can buy it. So, and I get to watch from the sidelines now, cheering on my friends. Thoughts on wheeling SpaceX? Only wheel it if you want to hold it. That's my advice to you. Only wheel it if you want to hold it, because there's gonna come a day when you will be forced to hold it.
Yes, great advice.
And I don't want to hold SpaceX, quite frankly, so I'm not going to wheel SpaceX.
Rocket Lab, maybe.
Rocket Lab? Yeah, maybe. Let's see. Did Tom Lee blow his cash on Ethereum this week? Yeah, I think his cash is down to like 250 million. So he definitely did.
Yeah.
Tanner's wife proposed. Oh, boy. Is Tanner engaged to Marshall? These guys are savage.
No, the lady he's engaged to is very nice, though. She's a good fit for him. They're going to do very well together.
She's great. Way too good for Tanner, quite frankly. But she's
I'm not going to disagree. Yeah, Tanner's great, but
Pixo, I promise you, I have this bookmark. There's just 21 questions ahead of you, so we'll get there. I promise. Just bear with me. Roy, are you adding to your figure position with this dip?
I began to buy options on it. So these are long dated call options. Actually, no. Let me correct myself. Call option, one singular. If we continue to fall, or if we hold in this range for a while as money comes in, I'll buy a lot more of those. The intention with that is not to convert them into shares at a later point. I have the shares that I like to have. This is just a layer on top of that so that I can take profits on the run up. There is a chance, like, it's very volatile and it has a very strong alpha. So it's going to move not necessarily in the same direction as the broader market. And a lot of their pivot is towards first lien. I don't know why, but the market really didn't like the acquisition. So I need to do a little bit more digging into that. But yeah, I think great company, great opportunity. And it was really funny, Tevis. So we were on the Wolf stream all day, and I was given a little opportunity to jump on there too. And right before then was Anthony Pompliano, and Tanner was there as well, and Gav as well. And he was soft pitching Figure Technologies to Tanner when it was supposed to be a SpaceX stream. And I was like, oh man, this is too good. It's a good company. I think it's a good opportunity. It's one that the market doesn't care about right now, but that doesn't mean it's going to be forever. So, yeah.
Yeah, I mean, figure $27. It is trading near the all-time lows. It is the company that Roy said would 20x. And Roy said it will absolutely 20x. He puts his entire net worth on it. And we'll see what happens.
Honestly, like, if we see it fall below the 25 range, I may put a significant amount of money in terms of options on it for an upside bet. But
Please
yeah,
let us know when you do so we can copy trade you, because you've been very accurate with Air Test Systems, which is currently trading for upwards of $108 per share, which is over
yeah,
5x or more
and
of
the
what Roy
premiums
bought.
are still so good on that thing too.
Yeah. What do you guys think of QQQ adding SpaceX? I think
I
it's
don't love it.
inevitable.
Yeah, it is inevitable, but yeah, I don't love it like that they're doing it early, making exceptions. Um, and it's a little strange too. Like if you're invested in the Nasdaq, should that be exciting to you? Probably not, because the IPO drop is pretty much inevitable. So it'll wear on the index a little bit. It makes the fund perform a little bit worse. I don't think it's a good move.
Yeah, it definitely is going to. I mean, look, you add more and more of these frothy companies into the index and it's market cap weighted. So it's just like, I could understand how some people might want to just take their capital out of that index and maybe have other options, right? Because it's not, I'm now forced to buy something that I don't believe in, that I believe is drastically overvalued. And I'm
Yeah.
forced to buy a big amount because it's so overvalued. So I don't know. Do you think Circle would be a good partner for Nebius? Roy, I'd love to hear from you on this. You know more about Circle than I do.
I don't know who they use for their inference, but yeah, I mean, like that's, if you guys aren't familiar, it's the company that issues USDC, which is my preferred of the stable coins. USDT is still larger, but they've done some pretty amazing things with it. Yeah, I mean, they're going to make a lot of use of that. They have actually the potential with the stable coin and the distribution there, I think quite good position to see a lot of use on the agentic level of this as well. I'm assuming that they'll need a fair bit of compute, and they are building some agentic products, but I don't know enough about them to really to speak on. Yeah, I mean, there's going to be a lot of companies like that that are rapidly growing, that have a lot of needs, that would benefit from a Nebius with the NeoCloud. And there will be some that, no, we're good with the products we have, but we need the inference, and so they'll do CoreWeave.
Yeah. Blake asks, when you become a multi-millionaire, if you could choose one, would you choose a yacht, a mansion, or a trip to Mars? What?
Assuming it's not a one-way trip, 3.
Really?
Yeah.
Wow. That is surprising. Why? Like,
It's Mars.
sure, but it's a rock with
Okay,
no
so
oxygen.
yacht, I get seasick pretty badly, and I'm also allergic to Dramamine, so it makes me nauseous, so it doesn't help. A mansion is not all it's cracked up to be. Right now, my wife and I, we are down to 2 kids in the house, and this fall we're down to 1 because he's going off to college. So we're actually looking at downsizing, not upsizing. Mansions are not that cool. What's awesome is having a friend that owns a mansion, and you get to go over all the time. So yeah, the trip to Mars is something that I think that would be unforgettable. It'd be amazing. It'd be frightening as well. But yeah, just being able to see something else, stand on a different planet, man. It's yeah. The other 2 are like, there's other options that would appeal to me more, but out of those 3, easy trip to Mars.
That's
Easy. What about for
assuming
you?
that's assuming you stand on a different planet. You can, bro, you know how many things can go? This is like, Christopher Columbus trying to find a new world. Like, many died, and you don't remember
All,
any of their names or most
all
of
right,
their
but
names.
more people have died on yachts than have in the trip to Mars. So
Okay, well, sure. Look, I think,
it's a terrible reason, but
yeah,
I want to
a
go. Let me go, man.
a yacht is very expensive. A mansion you can get for fairly cheap, realistically speaking. A yacht is crazy, depending on the size of the yacht. And it's like,
Yeah. And I'm assuming like they're not convertible. Like, in other words, like I just pick whatever the asset was worth the most, sell it, and get something I really wanted. But like, assuming we can't do that, yeah, give me Mars.
yeah, let me just sell Mars real quick and then buy a gazillion other things. Um, See, like this is I feel like a trick question, Blake. Blake didn't think this hard about the question as we're thinking about answering it, but this is a trick question because like you can't be a billionaire or a multimillionaire and buy a yacht and still live in a condo. So you're probably going to have a mansion if you're a multimillionaire. So the yacht is like cherry on top. Conversely, there's plenty of multimillionaires that don't have a yacht but do have a mansion.
And
So,
how many have gone to Mars?
well, I mean, yeah, with that logic, take away his PhD.
No, it was absolutely terrible reasoning. It's fun.
Yeah, Roy wants to be the Martian. Some people are saying
Great
it's because
book.
you're married. I don't think it's like Roy's just like, get me off this call. I can get some peace and quiet.
Bye, wife. No, she would want to go with me. So yeah,
Roy's just going out for some cigarettes. Don't worry.
went out to get some milk.
Yeah. What price will Nebius be by June 22nd, the day it's added to NASDAQ 100? June 22nd.
Oh, I thought you meant it would be 100. I'm like, yeah.
What price is Nebius going to be June 22nd, Roy? I'll say
232.
$270.
It's 10 days out. It's 232 right now. Let me say 255.
Let's Fiesta. All right, and the moment we have all been waiting for, asked 7 times, answered once. We finally got to Pixel's question. Thank you so much, Pixel, for your question. Great question, by the way. What is your take on ServiceNow, please? Thank you so much.
You want to go first, Tevis?
Look, man, it's not so much about ServiceNow, but it is more about this rotation into software. We've talked about this in previous pods. Now that, I mean, ServiceNow had a little rally upwards to what, 130? Let me check real quick. Yeah, to about 135. And now it came back down to 100. The question is, I mean, this is a second chance for all the people who didn't get into ServiceNow, who thought they missed it on the run up. I remember I had a little bit of FOMO even because Chris bought all of these leaps on ServiceNow in a huge position. And he was bullish on this rotation because, I mean, he's done way more research on this. Just the distribution, this whole thesis of like, oh, well, these guys are getting tokens wholesale and they can sell them retail and make a spread. And these platforms aren't going away. And in fact, AI is going to help them. And now it's come back down to 100. I'm like, okay, dude, like I need to rotate a little bit because it's going to be an opportunity. People are going to book some profits in the AI trade and they're going to realize that, hey, wait a minute, SaaS is undervalued. And that also includes Meta, by the way. It also includes, you know, so many of these other companies that we talk. Wix, what is Wix trading at right now, Roy? Let me actually check. Is it down further?
It's under 50 still.
$45, dude.
Yeah.
What? It went all the way down to $42.
Yeah.
It's so my point is like I think the rotation is still like top of mind. And ServiceNow, I think, is going to do fine. Ultimately, I mean, it's a buy. I don't know too much specifically about ServiceNow to like give you an in-depth thesis on the bull case. Only to say that from a macro perspective, it makes sense to rotate into high-quality SaaS names that have been oversold by the AI narrative disrupting them, which is not the case.
Yeah. Out of the large cap in the SaaS space that I don't own, ServiceNow is one of those I wouldn't mind owning at some point. But I also wouldn't probably be buying it realistically. There's other stocks even in that sector and space that I would find more attractive. But yeah, I think that here at 100 or right around $100, it's pretty attractive if you're a long-term investor. If you're playing it for when will SaaS rebound, I think that that'll happen this year, that the market will begin to sift out quality from those that are really deteriorating because they've been assailed by AI. They don't benefit from it. ServiceNow benefits more from AI than they are hurt by it. So I think that they're positioned well. I would also, like Tevis, want to know a little bit more, want to make sure I'm updated on things. It's not a company I'd say I'd know like incredibly great, but it's on level of like CRM, which that one I don't like at all. So yeah, I think if you're looking for a play in and you don't want to do IGV, you're wanting something like a large company, ServiceNow is hard to go wrong with. Wix, I would prefer to add to, much more prefer to add to Palantir, which it's expensive, but it's not insanely expensive. I understand the company very well. Their moat is just getting stronger because of AI, not the other way. And I mean, they're growing 70% organically. So, like, if I had to pick between owning ServiceNow, which I think it's not a bad price at all, or buying Palantir here, I'd prefer to buy Palantir, and I'm not buying Palantir. So, I think it's going to take a while for the market also before it wants to jump in names.
Yeah, man, even Palantir 127, like, but this is to be expected.
Keep
I mean,
falling.
you have this huge run up, and it's like, well, wait a minute, the valuation has to catch up to that, right? So
It hasn't fully, but it has a lot more. Like when it was trading at 200 like a year ago, that was
exactly.
stupid. Like I saw even some of the most diehard bulls say, "This is stupid. Let me take profits," and good for them. Now, if they want more Palantir, they can buy almost twice the amount, and it's growing a lot faster. And the moat is deeper. The product launch is deeper. The use cases more compelling. UK even like there's been some like it just man. So I'm hoping that one keeps falling. I would love to add Palantir meaningfully. It's like I had a share here and there. It's nothing meaningful as a DCA. But under 100, I start to get a little more serious about it. It still looks expensive there, but yeah.
Similar question.
I'm waiting. They issued. I don't remember if we hit this, Tevis. They issued a letter to shareholders, letting them know, like, hey, we're revising guidance downward from where they had actually guided from the previous quarter. That business model is deteriorating, the underlying Wix business model, even at the same time as Base 44 is just heating up. They've also laid off a number of workers. There's a lot of things that have changed. So I'm very comfortable with just sitting and waiting on the position that I have. I would rather have more data and pay a higher price for Wix with more certainty as far as like that things are working out with that Base 44 thesis than just add meaningfully here. So yeah, I'm holding. It's a hold.
I don't own a position. I don't think this is a bad spot to start a position. I got to start a short list of like beaten down stocks to monitor, and I got to figure out where I'm getting more money to be able to invest in these companies. So Wix is definitely on that short list. Ethan says, if the war ends for real, how long till we see rate cuts and SoFi remembers how to go up again? Yeah, look, I think the reason why SoFi is not going up is the same reason why Figure is not going up, which is rates. Rate hikes are on the table. By the way, did you see, Roy, yesterday the EU raised 25 bips? They hiked rates, right?
Yeah.
And the problem is that a lot of these central banks, they take notes from each other. If you're seeing one of the central banks raise rates, well, all of a sudden, I mean, you're now having a new Fed in place. Like a raise is on the table. I mean, here, let's
it is, yeah. Here's and like before I talk about this specifically, I will say that the difference is that Europe was hit a lot harder by what happened with Iran. They are a lot more dependent on energy prices, especially natural gas. Like if you look at TTF versus HH here in the United States, our price of gas went down, while theirs went up crazily. Oil as well, same factor there. We're the world's largest producer of oil. So we're hit less. It still hit everybody though. So just because they raise rates, in other words, doesn't mean that we do. This is where we currently sit for end of the year. So right now we're at 350 to 375. That is a 42.3% probability. And this moves around quite a bit. We can see a week ago it was 28%, and a month ago it was 61%. That's actually a lot of volatility that you usually don't see with rate cuts. I think that this is also fueled because Powell is out. He's still on the board, uncharacteristically for a Fed president. But one thing that he did very good at was helping the market know exactly what to expect each and every Fed meeting. So it'll be interesting to see what expectations are and how that lines up with reality and how the market moves accordingly. But right now, yeah, we're sitting at basically a slightly weighted coin toss in favor of at least one rate hike, 41.8%, 13.7% say two, and there's some where we're not going to talk about because I don't want that to be reality. A week ago, two rate hikes was at 22%, almost as much as the 28% saying, "Hey, we're standing pat." So yeah, if Hormuz is resolved, there's still going to be, it's a lagging indicator, so there's still going to be some heating up of that. It's not all going to go instantly away over the next 6 to 8 months, but I think that rate hike probabilities will decrease. If we end up the year with no hikes or just one cut, I think SoFi, I think Figure, and I think every lender will probably be in a better position in terms of company for sure, and probably for stock.
Yeah, it is entirely dependent on this conflict. The sooner this ends, the sooner inflation can start coming down slowly. The sooner we can get into a better setup for rate cuts. If we get rate cuts, or when we get rate cuts, or even when the market sniffs out that there is going to be rate cuts around the corner and starts expecting it, both Figure and SoFi and many other rate dependent companies are going to catch a big bid.
Yep.
Honestly, it might get worse before it gets better, because if we get a rate hike, then yeah, I could see SoFi in single digits again.
All right. Let's do more rapid fire with the Q&A. I'll be a little quicker, guys. I'm not good at that, but yeah, I see 20 great questions we want to get to.
Now that SpaceX is worth more than Canada, should he buy Canada holding a sink? I don't think he wants Canada. There's no ROI there, man.
Well, he'd fire everybody, and then it'd be okay.
Then yes, he should buy Canada holding a sink. Two questions. Is CoreWeave a buy here?
Yes. Yes, and also yes. For me, yeah.
Okay. How would you compare the risk reward of Oracle versus Nebius and CoreWeave? Wow. Okay. Go ahead.
I actually think the risk is higher for Oracle than Nebius or CoreWeave. If you look at their debt and their debt model, look at when it becomes due and mature. Oracle's not going to go bankrupt. It's not going to go to zero. They generate a lot of money. But the way that they have handled this, and also the way that they've handled their communication around these releases, if you remember that time when it like doubled after earnings because of the backlog, which wasn't exactly what. Anyway, I would much rather own Nebius and CoreWeave, and I think the reward is also less for Oracle. So it's a worse reward, and I think a worse risk than Nebius and CoreWeave, which I think are just fine. I'd say Nebius has the least risk out of the three, just in terms of like company, more so than like where the share is, because I think it's trading at a premium, just because they don't have the debt. They've already diluted, so they really are at a point where they can't go bankrupt just because that massive revenue runway that's happening. CoreWeave, there's a little bit of risk, but it's very tiny. Mostly take or pay contracts, so it's guaranteed revenue, barring the inability to provide that and not a force majeure situation. So anyway, I said I'd be quicker. My apologies.
Is Adobe a stupid buy after hitting a new low in 8 years? Yeah, I mean, look, if you don't think it's going to be disrupted, then it's a buy, but be careful because there is such a thing as a value trap.
Yeah, I'd rather buy INTC than Adobe out of the big ones there. I'm more confident, even with the TurboTax copycat type of products, that there's still going to be a place for them in the future versus Adobe. There will be, but man, it's hard to look at that and not see that AI is going to probably hurt them more than it's going to help them.
Tesla stock parity to SpaceX, Tesla all-time high this year. Maybe. I don't see it. Yeah. Maybe if they merge, then you'll get parity that way. Roy, you recently did a video breaking down your different positions and allocations. VG wasn't there. Did you sell VG?
No, I've been actually adding a little bit to VG. I'm actually due for an update. I think it's been about 3 months, and VG should have been there. Maybe I just overlooked it. It was a very, very small sliver at the time, and both through price action and also through accumulation, it's a larger position now. It's like a 6% weighting, I think, in my portfolio, and I have to double check, but yeah, so that's higher than it was.
Where am I traveling to next? I'm flying to Italy like 2 days from now to attend the wedding, and then I'll be back, and then probably Ireland for a little bit, and then at some point back into Canada. I haven't booked my ticket yet. Is it a good time to enter Rocket Lab? I mean, look, it's 50% off its highs. What should you guys buy more? Microsoft, Amazon, Meta, or Nebius? Yes.
All of those are good names as far as
Yeah.
stocks.
Seriously.
I'd probably of the four. I mean, Microsoft is the lowest risk. Well, no, Amazon would be the lowest risk. It had to be. But Microsoft, I don't think quite has the reward of the other ones.
He sounds so disappointed when he says Canada. Didn't you just start a new job? Yeah, I did. I'm working remotely right now. So I just finished clocking a full work day and then hopped on this pod with you guys. Any of you covering SYM feels like a no-brainer long-term warehouse robotics play. Neither Roy nor I cover it. Roy might know more about them. No. Okay, great.
I've never heard of it actually. So yeah, I probably won't get in, but I'll look into them a little bit. So
Travis, do you think Meta shareholders who always say it's cheap aren't accounting for the fact that CapEx expenses are actually backloaded this year, so this will have a hit on their profitability? Yeah, okay, great. But like what happens all the other years? You know, like Meta is still growing. Meta is a very profitable business. Yes, they are spending a lot of money right now, and we don't know necessarily what the ROI is going to be on that spend, but A, it's something that they control, and B, it doesn't discount the fundamentals of the business being strong, and C, the business is still trading cheap relative to those fundamentals.
I
So
agree completely.
it's a short-term blip. I mean, I think you're going to outgrow it. Roy, is Air overextended at these levels?
It depends if you're referring to the company or the stock. The stock, no, it's not. It's caught up in everything that's happening with silicon photonics. As far as the disconnect between the stock and the company, yeah, I think it's ahead of where it should be. But same is true with all the automated testing equipment, or most of them anyway. Silicon photonics, AI supply chain names that are of that type. I think that the same is true there. So there was an announcement that did not come that I thought they were pretty close to landing another major client, it sounded like, at the earnings call. So, and then this earnings is going to be a month later just because they're trying to get in sync with the rest of the market a little bit more closely. I think that's because their clients had asked them to. So we won't hear about that for a little while, but yeah, it still wouldn't surprise me if they land, another major one or two contracts between now and then. I don't think it has to for the stock price action, but yeah, my price target of $70 per share based on current news and expectations, I think is more than fair, but that can change with a single announcement. And just because 70 is fair value doesn't mean the market can't appreciate more.
Are we invited to Tanner's wedding? I don't know, but you're all invited to mine. And whenever that day comes, you're invited.
All right, man.
Did you guys talk about Hood? No, we didn't. Do we want to talk about Hood? It's on the way back up.
Yeah, I think we can leave it there. We can maybe have more to discuss when we do a next show.
When will you guys have a stock draft again? It would be fun to do it. I think our current stock draft, Roy, ends on the 22nd of June. So maybe we do a stream. Maybe let me add this to my calendar, actually. Hold on.
Yeah.
Stock draft here.
If I lose and get destroyed 2 years in a row, just know that when you have to go so far out where there's that many people making that many picks and you can't pick something that somebody else did, I get outside of the depth of my knowledge quick. So there's a few stocks I know a lot about, a good amount that I know a decent amount, and a whole bunch like the sim stock. Like I don't know them, or I've heard of them, but I know nothing.
Yeah, so I just added a little calendar reminder for the stock draft. Maybe we'll do an episode and invite the guys again and just do a refresher. I think as it currently stands, the current winner is Neil, followed very closely by Chris Hager, followed by Manuel. Roy and I are underperforming, but we will have revenge. Speaking of, if you started your portfolio today, I'm assuming from zero, what 5 stocks are you picking?
Yeah, I'd probably pick one if I was starting at zero. But yeah, let's say something happened, all my stocks got sold. I'm just sitting on money, and it's the current amount that I have. Boy, that's a tough question. For sure, CoreWeave. I think Nvidia too. Even though I wouldn't have like the highest expectations, I probably wouldn't buy Palantir. Ooh, I'd have to pick between SoFi, Robinhood, and Figure. Nubank I wouldn't pick if I was just five. Even though it's really attractive here. Man, that's a tough question. VG for sure would be in there, by the way. Let me say, I think SoFi and Figure I could fit in, and that's five. That would leave Robinhood out, which would not make me happy, but yeah.
And that's life. I would be the same. I would buy one stock, and I would probably go in leaps with that one stock as opposed to buying five. And that one stock might be something that has some good upside potential through leaps. Like, I don't even know. Maybe SoFi. Maybe not. Maybe some AI company.
And let me say, it's not because I'm not bullish in Robinhood. It's my number one position. It's just the reality is I have a very low cost average there, and all the ones I mentioned are like screaming buys. I've not added to Robinhood yet, and there's a reason for that. Well, part of the reason is my number one position. But
are you adding Broadcom below 380? Neither of us own Broadcom. I'm not against buying Broadcom. I think it's a great company. I think they're going to do very well over the long term. What do you think of P-Sky? Oh God, what is it? Paramount?
Paramount,
now,
okay.
With the Warner Bros. Merger. Yeah, it's Paramount Skydance. So the merger closed, Roy. I think it was 110 billion was the amount, and it got past the regulators and it closed. Like, what do you think? You think?
I'd rather own Netflix if I was gonna be in that space.
Well, interestingly, I mean, Netflix sold off quite a lot with this whole Warner Bros. Situation. It's at $80 right now still.
Yeah, it's having a rough. Well, it's only down 11%. I thought it was down actually more than that. Over the last year, it's down 33%. That's what it is.
Yeah. Do you think CoreWeave can get to 200 end of year? What would it take to get there? I think it could get there.
Oh, yeah. I think the biggest thing is continued execution on what they're doing, and second, the market would need to get over. I think the one thing that it holds against CoreWeave, and that's not insider sells, but it's just frankly the debt. It's concerned about the debt, and I think it's a misunderstanding that if they just need to look at energy companies, they've done the exact same model here. There's other data centers that are beginning to do that as well. So I don't know that the market will figure that out by the end of the year, but I think within the next year and a half for sure. 200 is still a lot, but yeah, that's the main thing holding it back. And then just things continue.
How much or how little does a CFO of a company matter? I mean, look, man, financial engineering is a real thing. There are financial moves that a CFO makes that is accretive to shareholders, whether that's buybacks or whether that's different types of issuances, debt that they're raising. Like, all of these things would be things that a CFO would be part of. It's a important role, but I mean, look, I come from a product background, right? So I fundamentally believe that like the product is what makes the company, and the CFO is not that. It's like it's a person to help balance the books and get ideas around how we can financially engineer growth. But financially engineering growth alone does not get you a sustainable, like a great company.
Yeah, I think one thing I'll add to that though is like for a company like Nubank, for a company like SoFi with Crystal Point there, your CFO role usually does a lot more with the financials because not only are they doing that for their own company, but also strategically, like Tevis mentioned. So for Nubank, like unknown, I don't think would have been the issue. Maybe we would have seen an even worse reaction because I think who they hired was really good. But it's more if the market doesn't know them at all, or it seems like a really bad hire. Like, oh, what's this person's background? Well, they got a BA in accounting from this university 2 years ago, and they've worked at a low accounting job. It's like, okay, should they be running like the CFO of Visa? No, they should not. So that would be the only factor. It would not impact my thesis, except if it seemed like that their credentials didn't match, or I guess if it was somebody that was like way too close, and I had concerns about that. Like somebody hires their buddy, that doesn't always work out as far as upper level management.
Yeah. All right, we are at 2 hours. So last question: what countries would be your go-to move for retirement? I would stick towards Europe, maybe Eastern Europe, maybe I don't know, somewhere in Europe. I don't know about Asia, and I don't think North America. Roy?
And I am going to interpret that answer as what countries would be your go-to move for retirement, Tevis, which would be you in retirement. So me choosing for you would be United States, because then we get to hang out more.
Well, I mean, okay, what would you choose for retirement? Let's say you had all the money you could ever want.
Yeah, it'd be the United States just because family's here. So
That's fair, I guess.
yeah.
I still dream of a day where Roy is living with his family in Greece, and we can be in the same time zone.
Like, what would be the reality? Probably, as far as a dream, it's kind of like what my parents do. That they're snowbirds, so 6 months of the year they live up in Alaska, so they still have 3 months of winter. But like in the summer, it's the best place, most gorgeous place in the world where we lived, and I just was blessed to live and be grown up there. And then the other 6 months they travel the Midwest or the South, usually Southwest. So like 6 months of the year in Greece, maybe 8 months, and then like 4 months somewhere like Alaska, or maybe reverse it and go to Hawaii for whatever it is. Like that would be phenomenal, and I could see that being the dream there. But since I'm married,
you can buy a house by the beach in Greece for like 40,000, like 50,000 US dollars. Like it's so cheap.
Somebody that retires with here in the United States, what would be a pretty meager retirement, barring Social Security, would live very wealthily in Greece, and it's beautiful, and there's history and there's culture, and
it's cheap. It's always sunny. The beach is free. It's always there. Like what do you want? Like people are so laid back. They hang out in coffees. Like you go to a coffee, you have a coffee, a little espresso for €1, hang out for 30 minutes, 45 minutes, like you take a walk. Like it's such a peaceful life. And it's so like this is why Europe doesn't quite frankly care about what's going on in the world or innovation or any of these things, because they're like, all right, cool, like we can live on much, much less and just enjoy life. Anyways, we have to answer this before we leave because it's a donation. Thank you so much, Big Rudy Smasher. Picked up 5,000 shares of CoreWeave at $91. Then it ran up. I'm mad I did not get to fully build out my position. Do you think we'd return to $91? I mean, dude, like we're at $100. One pullback can get us back there. I would say write cash secured puts at $91 if that's what you want. And if you don't get assigned, then enjoy the free money.
Yeah. Again, it's not financial advice, but if you're like, hey, I don't want to average up, I want it at 91 or below, think about writing cash secured puts. Like you get premium, or you get shares, or you get both.
Yeah. Thank you, everybody, so much for watching the show. I really appreciate it. Every Monday, every Friday, we do shows. And I hope you have a terrific weekend ahead. A happy SpaceX IPO day. And we will see you back on Monday. See you then.